If you're planning for retirement with a goal date, you may have heard about the importance of long-term care insurance, but you put it at the bottom of your to-do list. If that's the case, we're going to share with you some information about long-term care insurance that may motivate you to move it up a few notches. Long-term care insurance is crucial for pre-retirees these days, as it provides financial protection against the high costs of extended care, such as nursing homes or in-home assistance, which can quickly deplete your retirement savings. It offers peace of mind by ensuring access to quality care without burdening family members or compromising financial stability. Planning for long-term care early allows pre-retirees to secure affordable premiums and tailor coverage to their future needs. On today's show, we're excited to welcome Christina Frey, a colleague and expert in long-term care insurance and a Ramsey trusted pro, to help you determine if it's something you need to get through your 30-plus year retirement. I'm Brad Lineberger, certified financial planner and founder of Seaside Wealth Management.
And I'm Matt Callahan, certified financial planner. Welcome to Navigating Retirement.
Welcome, Christina. Welcome to the show.
Well, thank you, Brad and Matt, for having me today. I really appreciate the opportunity to share with folks about the importance of long-term care protection.
So before we jump in, tell us about yourself and why did you get into the insurance business?
Yeah, I grew up here in San Diego, California, and really from a very young age, I experienced some of the pitfalls of watching my own family not plan accordingly for their extended care needs.
Yeah.
So I got to see firsthand what it was like to not have a plan versus having a plan. And that's when I decided that I was going to dedicate my full-time career to helping others.
Okay. So if you could just share with the audience a little bit, what is long-term care? What is, the activities of daily living? Let's just kind of define this at the top of the show here.
Yeah, I'm glad you asked, because one thing I have found is that most folks that I work with have a complete misperception about what long-term care is and what the need for long-term care might actually mean to them.
Yeah.
Long-term care, by definition, is any type of extended care help someone might need, whether at home, in an assisted living facility, or potentially maybe a nursing facility as well. And that can be as a result of conditions that are maybe end of life, like, Alzheimer's, dementia, strokes, that's a lot of it. Or it can also be as a result of things that can happen earlier in life, like accidents. Car accidents are a big thing where we see folks sometimes need care, prior to the age of 65.
There's a statistic out there that's wild. I think 7 out of 10 of us are going to need some sort of care, but nobody wants to think that they're going to be part of the 7. They all think they're going to be part of the 3 that doesn't need it. But.
Yeah, it's very true. It is our largest risk we face, as we continue to age. 70% is very accurate. And, it is one thing that I find no one really wants to talk about long-term care.
Right.
It's one of those topics that you just want to kind of push it to the back burner and hope you never need it. But in actuality, 1 out of every 2 women are needing care and 1 out of every 3 men.
Yeah.
Wow. And then so how much does it cost to go into assisted care or have someone come to your house to care for you?
Currently the national average is fluctuating about $6,000 a month for care being done at home or potentially in an assisted living facility. If you have to enter a nursing home, the national average is closer to $9,000 to $10,000 a month. Here in Southern California, where the cost of care is more expensive, or other states in our nation where labor rates are sometimes higher, you can see care for home probably being closer to about $7,000 to $8,000 a month. And if you want to be in a fairly decent facility here in San Diego, you're looking probably closer to $12,000 to $16,000 a month.
Wow, that's right on with what Brad and I see when we're doing advanced plans for people. We're doing about $12,000 a month in today's dollars, and then lasting for an average of 3 years. And then if it's that bad, do you agree? Maybe someone's not making it out on the other end, if that's the case.
Yeah, I think what you're doing for planning is like dead on. That's one of the reasons I like working with you, because I think by working with a wealth management advisor or certified financial advisor, we can really dial in the coverage to meet each person's customized needs.
Yeah.
But yes, the average length of time that men are currently needing care is actually just shy of women. It's about 2.7 years.
Yep.
And for a woman, it's closer to 3.8 years. So we do recommend, that if they can, buy a plan that covers them for at least 3 to 4 years. And if they can afford a little bit more, in the premiums, then there's no harm in getting what they can't afford.
Okay, so I guess Brad, maybe we should make adjustments in our plans, or for people out there for women, maybe planning for a 4-year long-term care event,
Right.
and then for men doing 3 years.
Absolutely. I would definitely recommend if 4 years for women. Most women, even if you recommend a 4-year plan, they're going to tend to want more coverage.
Give me
They
5.
generally are wanting somewhere between 4 to 6 years of coverage. And I just think it's because we like having that extra peace of mind and knowing that we're not going to run out of coverage, or we can get that quality of care we're looking for. And for men, I think they pretty much fall anywhere between 2 to 4 years on average is what we're seeing as like the sweet spot.
Yeah. So inflation, how does inflation impact this, and how do you bake that into kind of the planning process, or maybe the insurance policies that people are purchasing?
Inflation is probably one of the most important things a long-term care specialist can design in a plan. Sometimes it makes sense to build it into the monthly benefit. Other times it makes sense to add an inflation rider into their plan. Obviously, the cost of care is already high enough as it is, and down the road, 20, 25 years, it's going to be much higher.
Yeah.
So when we do design a plan, we're really going to look at factors as to what they can co-fund for their care versus what they cannot. Do they have the assets to help hedge against inflation, or are they really wanting to preserve those assets for legacy planning? And we need to make sure we dial that plan in to do what it needs to do to go the distance for them.
So how does Medicare play into this? What does Medicare cover? What does it not cover? Just kind of talk to us about the interplay of Medicare and long-term care.
Yeah, Medicare is really healthcare insurance that was designed to obviously protect folks, for their care after the age of 65 or those disabled. And it really wasn't designed to cover long-term care services. Back in 1965, when Medicare originated, essentially long-term care was not a topic they needed to be concerned about because women were still at home able to care for people. But with the shifts in society and the needs for women to go into the workplace, obviously a gap occurred with our Medicare health coverage, where now we realize we didn't have that care. So any care or assistance you do get from Medicare is going to be very limited and short term.
Yeah.
Generally, we're talking about short term rehabilitation stays after a hospital and a nursing home, or limited help at home while you're recovering to get back on your feet.
We run into a lot of people who sort of have the misunderstanding. They think Medicare is going to cover their long-term care, and it really doesn't.
Yeah, you're correct, 100%. It's definitely not going to cover their care, and even if it did pay for some of their care, it's going to top out at 100 days generally, and depending on what type of Medicare plan you have, may determine if you're going to have co-pays and co-insurance during that time or not.
And so now that people know that Medicare is not necessarily accounting for their long-term care, at what age do you think people should start looking at this?
Well, statistically, on average, we have the data. Folks are beginning to secure their coverage at an average age of 52 now. In the past, when I began my career 26 years ago, the average age was 67.
Yeah.
So we've really seen that come down quite a bit. And I think that's really because of awareness. People are now watching their grandparents and parents go through the pitfalls of extended care, seeing what Medicare doesn't cover, and looking into these coverages much, much earlier. So we do recommend that people try to secure this coverage in their 50s, and certainly no later than age 60 if they can. It doesn't mean we can't help them after age 60. It just, the premiums can become more cost prohibitive.
Okay. So a couple questions here. Just share with the audience, how does long-term care insurance work? So kind of explain that. And then should both spouses apply for the insurance?
Yeah, long-term care insurance is what I like to refer to as like almost a post-disability plan. Mm-hmm. Most folks in their working years had disability income protection through their employers or private insurance. And all essentially we're doing is creating an additional income stream when they need extended care services to help pay for that care. That way we don't have to put that pressure on their income, retirement income, or their retirement portfolio.
Yeah.
Okay. And as far as how a long-term care product works, besides creating the income stream, it's also going to provide that person access to quality care to make sure their care wishes are met. Most folks have advanced healthcare directives in this day and age, and it's going to allow them to fulfill their wishes and following the guidebook of their choices for how they want their care to happen.
Yeah. We see most of these policies. If someone out there can't do 2 of the 7 activities of daily living, so eating, bathing, cooking, getting out of the chair kind of thing, the policy tends to kick in and starts making payments.
You're correct. The policies are now federally tax qualified plans, so they're regulated to make sure that the benefit triggers all occur the same way.
Yeah.
So generally, if you need assistance with those 2 out of 6 activities of daily living, or if you have some type of severe cognitive impairment, you're going to be able to trigger a claim and get those benefits
Get some
coming in your
coverage.
direction.
Okay.
So is there any time that it's appropriate for someone to just self-insure and not have long-term care insurance in place?
Well, you're talking to an insurance agent, but it's hit or miss for everyone. I find in this day and age, even my clients who are very affluent and have significant wealth understand the importance of transferring risk away from them and not essentially completely overpaying for medical care costs. Because when you self-fund, you're basically saying, I'm okay paying significantly more for my care than what I could if I just transfer some of this risk away. But do we run into people who feel like they can self-fund? Absolutely. And it is a personal choice. I find most of the people who can actually maybe do it are folks who usually have in excess of $3.5 million of net worth, not including any equity in their home. And generally those that don't have surviving spouse to be concerned about, or maybe dependent children with special needs, or not wanting to leave any sort of gift of legacy.
Yeah, and I think we would agree that we see these people, they have enough money to self-insure, but then when we show them the worst case scenario of a long-term care event, the assets get depleted rather quickly. So I guess now that we understand that we want to transfer some of that risk to the insurance company, is there a general rule of thumb of how much of the a benefit should you have? Like, let's say that the plan says you need $5,000 to fully cover this. Well, how do you fully fund or fully plan for that, or do you do less? Tell us more there.
Yeah, this is one of my favorite parts of designing plans with clients is really getting into the woods of how much coverage do they really need and how much do they not need. You really want to do your best job to adequately insure someone. No one wants to pay more in premiums than they have to, right? I mean, I certainly don't, and I'm an insurance agent, but it's really a process where we're going to really evaluate their goals and their ability to co-fund that risk. If someone's got an excellent income stream, we've got a lot of folks with pensions here in Southern California or across the nation, plus their Social Security, and we can see that they can comfortably pay a significant amount of their care needs, then we might design a smaller plan for them. There's no 80-20% rule or anything like that. For some clients, they can pick up 50% of the cost. Others can only pick up 90%. It's different for everyone. And it's an analysis we do when we do the financial discovery to see what means they have, what assets they have, and then working with folks like yourself to help us determine how much more money can we pull out of that retirement portfolio for this risk if we have to turn it on today or 20 years from now. And that can help a specialist like me to really dial in that plan.
Yeah. So another loaded question here. Is there ever a scenario where it doesn't make sense to purchase long-term care insurance?
Yes, I would say there are a couple of scenarios. One, certainly if someone does not have any assets and their income is very low, someone who generally would qualify for Medicaid or Medi-Cal here in California would not be a good candidate because there's no concern of spending down their assets and depleting and outliving their resources. So definitely people who are at that federal poverty level or close to it might not be good candidates. And certainly other good candidates would be people who are just in complete denial of ever needing care, I hate to say. If you can't recognize that we're all going to get older and at some point we might need help, then it's really hard to convince you that you might need a plan. You know, you have to realize that you're not going to maybe just drop dead one day, that there's going to be a progression in the decline until your time is up.
Yeah.
Perfect. Okay, so now we've decided we all most likely need some kind of long-term care insurance in place. What does the underwriting process look like?
Ooh, that's one of my worst nightmares is underwriting. If there was no underwriting, my job would be real easy. But underwriting in this day and age is what I would call hypersensitive, to be quite frank. when I started, I felt like everyone got approved. It was really easy. They didn't even order medical records or do cognitive screens. But now those carriers understand the risk they're taking on and the amount of money they're going to pay out in claims. They have the statistics just like us. They know 70% of people are going to need care. The older we get, the higher that risk becomes. And so now, if you want to get long-term care insurance, depending on the product, you're generally going to answer some medical questions as part of the consultation. You're going to answer more questions as part of the application. And most carriers are going to pull medical records to make sure the information is accurate. And if you're over the age of 60, you're probably most certainly going to be doing some type of cognitive interview, either over the phone or potentially face-to-face. So much more difficult than ever before. And that's why we advise you look at getting this while you're younger and better health.
Right. Absolutely. So talk to us a little bit about the tax treatment of long-term care. You know, are premiums tax deductible? How about our payments tax-free? Just kind of walk the audience through that.
Yeah, one of the beauties or the sizzle about owning a long-term care insurance product is those benefits when they do pay out for your care, pay out tax-free, which means you are not going to pay income tax on that money. That's huge.
Yeah.
That can really make that product last much longer than potentially turning to an investment where now you have to contend for maybe market losses, for pulling money out too soon, taxation. As far as the premiums, we're seeing a lot of movement in this area. Now you can use your HSA money if you have a health savings account to help fund your long-term care premiums. It's based on a tax table that is distributed each year by our internal revenue service and your age. The older you get, the more you can reimburse yourself. If you are not able to use HSA money or you don't have an HSA plan, then individuals also have the option to itemize those premiums as a Schedule A qualified health plan expense on their 1040 tax return. Now, not everyone itemizes when they're young and healthier, but when you get older, it becomes more important, especially when you're allowed to now itemize more of that premium as your age is increasing as well.
Right.
And so in the past, there used to be just the standalone long-term care policies, right? And so some of the people out there are hesitant about putting these long-term care policies in place because we've seen recently just huge increases in the premiums, right? Tell us about some of these new products or hybrid products that are out there.
Yeah, the hybrid products, in my opinion, are some of the hottest products on the market today. I'm seeing a lot of consumers really lean into these products and want to know more about them. And I think the reason that is because what you just said, Matt. They've seen their parents or grandparents deal with rate increases from traditional or standalone long-term care solutions. And that's frightening to them to watch their parents, try to budget their monies and figure out how they're going to keep this plan or maybe lose it. That's something they don't want to go through themselves. So with a hybrid solution, which we also refer to as linked benefit or asset-based solution, those products have guaranteed premiums. It's a fully guaranteed product to perform exactly how it is contractually designed, which gives folks comfort to know that they can count on things to be consistent and for the benefits to be there when they need them.
So speaking of that, give us some of the pros and cons about some of these products that are out there today, the good, the bad, and the ugly.
Yeah. So just overall pros with long-term care insurance in general, I'd have to say that we've got more product on the market today than ever before, which does give consumers a lot of options and choices and more flexibility to how they want to approach their extended care plan. The cons, I would say, is underwriting. Underwriting is so tough that conditions, diabetes, we can get you in, but if you're having complications or you're on too much insulin or there's other factors with that, you smoke cigarettes and you're diabetic. That could be much more complicated for us to find you a plan. Doesn't mean we cannot, but it means you really want to work with a specialist who can navigate through those different underwriting demands and make sure we align you with the right product initially. One of the worst things that can happen is working with an agent who doesn't understand underwriting and you get declines or multiple declines because that can make it much harder for us to find you another company after that. But other pros I would say is, we've got these hybrid products that now offer a cash indemnity payout come claim time. And that really gives the person needing care complete control over that money that's coming in from the insurance company to use however they want, hire whoever they want. If they don't need all the money, they can tuck it into a savings account to plan for other expenses that might arise. Products today are now offering more international protection than ever before. We've got a lot of folks who want to retire outside the United States. Expats is a real thing.
Yeah.
And so I think we're going to see some more flexibility and more features that really show those clients that the insurance company understands what really matters most to them when that claim happens.
Yeah.
Yeah. And then so in terms of when people are shopping for this type of product for companies, what should they be looking for? What are some of your favorite companies to look at?
Well, number one, they should be looking for a long-term care specialist because that person is generally going to be an independent broker who works with all the top-rated companies. And that's definitely what they want to look for, top-rated companies. We don't work with anyone that holds a rating less than an A, A+, A++ on the AM's Best. And additionally, you want to also look at that company's financial strength. Most of the companies we deal with have over $100 billion of assets under management. We're talking big companies, Nationwide, Mutual of Omaha, One America. We're not talking about the mom and pop companies that, may or may not be here down the road.
Yeah.
So financial strength and stability is key, and understanding how the claim process does work. Some carriers will just bump you to a third-party administrator come claim time, and you don't know if that company is going to be here in the United States or offshores in another country. No harm about, offshoring stuff, but if you can't understand the person who's doing your claim, it can make it more complicated and frustrating. Another thing to be concerned about is, are you going to have a dedicated claim advocate during that claim? Most policies today include care coordination in the solutions, which is going to be that care management type role to really help you fill out that claim paperwork, get your doctor to sign the certifications, and help you really maximize the most out of that policy so that you can have the care you need.
So if someone out there's thinking about purchasing long-term care insurance, how much insurance should they purchase? And they sometimes quote it on a daily, on a monthly. Kind of walk us through that, and how do you think about that?
Yeah. So when I'm looking at someone's situation, I'm really looking at their specific financial situation. But if we know the cost of care here in San Diego is $6,000 a month or $7,000 a month for assisted living facility and nursing homes, or $16,000. Most people don't want to fully fund the nursing home risk. I would say they generally want to make sure they have a plan that covers the cost of care for them to remain at home or in the community or assisted living. And if they should go to a nursing home, that's really where they're looking at that co-funding approach, where they're saying, hey, my plan kicks out $7,000 a month and the nursing home is $16,000 a month. I'm okay picking up the difference from income or from my financial portfolio. And the reason that is because when you're in a facility, you're not needing your income for things you normally would be spending it on. Like you're not driving a car, you're not living at home, buying your groceries.
Yeah.
So you free up some of that income stream. So rule of thumb is, you definitely want to align it with what risk you want to transfer. But most people I find are trying to at least make sure they can stay at home or in the community or assisted living.
Okay. And then so when people are looking for a long-term care specialist like yourself and they get introduced, what kinds of questions would you expect them to ask you to make sure that you're the real deal and that you're going to set them up for success and give the right advice?
Yeah, that's a fantastic question. I find a lot of consumers don't actually ask that question enough, and I feel like they should. I think sometimes they spend less time interviewing the people they should work with than they do, for other things like buying a car. They'll go from place to place to place and shop it out.
Yeah.
But when it comes to working with a long-term care specialist or really any professional, that's helping them with their retirement planning, you want to work with someone who's truly vetted, has the experience and knowledge, and a proven track record. When it comes to long-term care, experience is key. Most of the top colleagues in this nation have been working with long-term care in excess of 15, 20, 30 years. Someone new on the block doesn't mean they don't know what they're doing. It's just you want to make sure they have specific training and designations. CLTC is the Certified Long-Term Care Designation, which basically means above and beyond the normal training we have to do, that person has taken additional steps to understand industry updates, how to design plans, and that customized approach we talked about, and to really walk people through the different steps to determine if having a plan makes sense or not.
Okay. So if someone out there has a policy in place and those premiums have gone up over the years, it's gotten more expensive, What can they do to help keep the premiums level or maybe even bring them back down? Are there any strategies you can offer?
Yeah, I would definitely make sure they get in touch with a specialist because everyone's situation is different. If they cannot comfortably afford the rate action increase and keep the plan as is, then we would want to look at the options to decrease. And generally, we're looking at, does it make sense to decrease the inflation? A lot of those old plans have a 5% compound. Sometimes dropping it down to a 3% compound is the magic, thing to do. Other times it's keeping the inflation and dropping that daily or monthly benefit. Sometimes we look at the benefit duration. If they've got unlimited, we look at, does it make sense to drop it to an 8-year or 6-year? We really want to assess their situation. If that person has a history of cognitive decline in their family, dementia, Alzheimer's, Parkinson's, getting them to move from an unlimited plan to a limited benefit duration is probably not going to happen in their mind. So we will try different ways to bring that cost down for them.
Yeah. Okay.
And then I think we touched on it a bit, but what are some of the things that are out there? Absolutely, you won't get long-term care policy, but if you're married with a spouse, I heard that you should apply anyway. Is there discounts, right? Or something like that?
Yeah, certainly when you're married or in any committed relationship, in this day and age, you don't actually have to tie the official knot. The carriers will offer you some type of companion or spousal discount when you're applying together. And even if you're not applying with the same carrier, maybe because your health doesn't allow you to be on that same product, then most carriers will reward you for being in that committed relationship with a discount, even if you're with another company. Things that might, make it to where you can't have long-term care insurance is going to be certainly if you're needing care today. If you're having home health care come in, you're in an assisted living or nursing facility, you missed your mark. You're a little too late, unless you're having a miraculous recovery and coming back to good health, of course. Also, things that can cause you to not be eligible, but maybe not permanently disqualified, are things like physical therapy. If you're in physical therapy and under treatment, or you're scheduled for surgery that hasn't been completed yet, we can't actually insure you until that physical therapy is completed or that surgery or procedure has been completed, because we want to make sure you've recovered, you're back to normal health, then we can insure you. Cancer used to be something we couldn't insure, but now we can. If there's enough history, or depending on the stage and the treatment, we have more options than ever before to get people insured who maybe in the past weren't eligible because of a cancer history. So good things and bad things are happening with underwriting.
Yeah.
The main thing is, don't assume you're not eligible. Reach out, go through the screen, and then find out what options are available for you.
Perfect. I think that's great advice.
Yeah. So this is a show about navigating retirement. What else would you share with the audience about how to navigate retirement as it pertains to long-term care planning?
I think the most important thing is just to start a conversation. Education and awareness is one of the best things we can arm ourselves with as pre-retirees or post-retirees to be able to make good decisions for ourselves and our loved ones. And by starting a conversation, you're going to learn very quickly, are you eligible or not eligible? And then we're going to walk you through the consultation process of determining what type of products may or may not make sense for you. By the end of the meeting, I find people are on board. They're like, thumbs up, I want to do it. Or they're like, thumbs down, I don't want to do it. And, I wish everyone bought long-term care insurance. It would definitely make my job easier, probably yours as well, but it doesn't make sense for everyone sometimes, and that's okay, but if they go through the process, at least they'll be able to make that determination with good data.
Yeah. Yeah. Well, thank you so much for being on the show. We really appreciate it.
No, thanks for having me. It's been a joy, and I look forward to the next opportunity.
Yeah.
Perfect.
Sounds good.
Thanks again.
Thank you.
All right. All right. If you'd like to learn more about long-term care protection and how you can plan for your future care needs, feel free to reach out at freyinsures.com. And if you fill out one of our forms, we'll have one of our trusted advisors reach out to you. We do work with a group of specialists that have over 30 years of experience. All of us hold our CLTC designations, and we are also Ramsey Trusted Pros.
Thanks for listening. If you're watching us on YouTube, be sure to give us a like and subscribe. And if you want to learn more about the show, visit us at navigatingretirement.net and be sure to check out some of our other episodes.